Palantir just reported their earnings. They are down now 5%. Listen to this. Earnings per share. Expectation was they were going to make 5 cents a share. They came in making 5 cents a share. Revenue, $533.3 million versus an expectation of $532.4 million. That is a beat. And you would expect that now the stock price would be up, but it's not. It's actually bouncing around. Now it's down about 3%. I've seen it down as much as 11% as somebody on Twitter reported. So Palantir is a very, very interesting company. It's been one that we have spoken about for multiple years. When this thing was around when it hit $45 on the nose, January 27th of 2021, I remember standing in our old studio and we were saying, this thing's probably somewhere worth around $5 a share. And people said it wasn't going to get there. It got down to $5.84 at the beginning of this year. The thing here is they make a fantastic product, but that doesn't mean that you just go and pay whatever you want to pay for it, because you are going to get burned. I mean, look at this and you say, let's say $6. You had bought this at $5.84, $6. And now it's at $17 and change. And you are still significantly off of those all-time highs when this thing was supposed to be going to the moon. It was the greatest thing since sliced bread. And if you look at the income statement, cash flow statement, which we're going to look at soon, they're doing significantly better than they were from their all-time highs in the beginning of 2021. So I'm going to pull up the press release here. We're going to go through a couple of things that just came out in their quarterly earnings. Net income of $28 million. I'm just going through some of their Q2 highlights. Revenue growth of 13% year over year. Now, that's not, I actually thought that would be a little bit higher. I would expect a little bit higher for a company that's in this type of growth phase, but 13% year over year. Commercial revenue grew 10% year over year. This is something that I like to see, because the big thing and the big holdup for me with Palantir has always been, I do not want a company that is just going after government contracts. That's why I'm pretty apprehensive of going after companies like Lockheed Martin, Northrop Grumman, because I'm worried about those government contracts. I don't want to live and die by the government, and I love that they're starting to go into this commercial space. Government revenue did grow 15% year over year. Customer count grew 38% year over year and 8% quarter over quarter. That's fantastic. Cash from operations of $90 million, representing a 17% margin. Let's continue on. Let's get down here into, this is the first time I'm looking at this. So margins, looks like they increased 2%. Free cash flows increased. Let's see what they're guiding, because that's kind of what let's see what the stock price is doing first. It's down about 4% right now. They're expecting for the third quarter, 553 to 557 million, which is more than their 533.3 million. Adjusted income from operations 135 to 139 million. Full year, they're raising total revenue guidance in excess of $2.2 billion. I'm not sure if I mentioned this before, but they are going to be doing a $1 billion share repurchase program that was authorized. The question is going to become, is this a good thing that they're doing? Are they buying back their shares at the correct price? We're going to look into that in a little bit. Let's see if so they're going to be talking here at 5 p.m. Eastern time. That is going to be their press release call. Forward-looking statements. Okay. So those are the highlights that we've seen. Anything that stands out here? Let's go over to their financials and see what they have going on. So we talked about how in 2021, when they were at their all-time highs, you would think that from those all-time highs coming down to about $5.84 a share, you would say, oh, revenues probably got worse. Well, if you look at this, revenues in 2020 were $650 million, went to $1.2 billion, $1.65 billion, and about $2 billion. So revenues are increasing, absolutely. Profit. They are still not making a net income. They are, however, making cash flow. They have continuously made cash flow. I think Paul would remember this better than me because he's more involved in this than I am. He doesn't own any shares, but it's either 10 or 11 quarters consistently of positive cash flow. And that's a fantastic thing, but they're still not there with the net income on a yearly basis. So at some point, that's going to have to change. And I do think that that's going to probably change pretty quickly. Let's go to the cash flow statement and just look at the past. Look at this cash flow growth, free cash flow growth. Losing $120.9 million in 2020 to about $97.5 in 2021, $225 million positive in 2022, 346 in 23, and you can see that their cash flows, they're expecting, what was that number that they were talking about expecting? Let's see here. Where was their cash flow number? I know I just read it. Expectations, outlook. No, okay. I didn't just read it. I was reading something else. Well, anyways, they better be expecting more cash flow than they did in 2020, fiscal year 2023. 346 million. I'm sure they're going to be doing more than that. Now let's go to back to the income statement because there's something I want to talk about here. Let's go on quarterly. We need to be making sure with this share repurchase, they have done a lot of dilution over the past couple of years. There's no way anybody can argue that. Now they're going to start buying back those shares. Are they doing it at an appropriate price? As you can see here, they've continuously been diluting shareholders every single quarter, whether it's a couple million shares or what. They've continuously been doing that every single quarter. When was the big... I remember when we did videos in the past, they did some massive, massive jumps. Yeah, you could see 905 million shares outstanding to 2 billion. I mean, basically doubled their amount of shares over a year period. And that's when all the hype was happening in the market. People were very excited. People wanted to go buy the stock. I'm worried that they're going to be buying back these shares at the wrong prices. And that is not the best use of capital, especially for a company that is this small. Pulling up the 8 pillars here. Let's look at some high-level stuff. This gross margin gets me every time. Gross profit margin of 78.75%. That is an astonishing number, and that is a software company. That is what this is a company that is in the defense space. They are, when you're looking at companies and saying, hey, these gross profit margins, these are the companies that you should be comparing them to. This is absolutely what you should be comparing them to. And Palantir does a fantastic job of that. Now, their return on invested capital, remember, guys, it's skewed. We don't want to be judging a company based on this. And that's going to take me to the 8 pillars right here. These pillars look very bad. And you don't go and buy a stock just because all the pillars are green. And you don't go and sell a stock because all of the pillars are red. This company is so new. They're so young. They're still in a growth phase. They're still in a kind of finding themselves space. Are we going to go the commercial route for our main customer base? Are we going to go the government route for our main customer base? While they're still figuring that out, while they're still trying to generate profit, you don't want to penalize them and just totally omit this company from your purchase or saying, hey, I want to be invested in this thing. Now, let's see what the analysts have to say, because the analysts are typically the cheerleaders here. They are going to be going from 22 cents a share to 48 cents a share. Wow, that's some big earnings per share growth. Big earnings per share growth over the next 4 years. On the revenue side, wow, basically more than double revenue. 2.25 billion to 5.37 billion. That is... we're in the 20% range. And if we go back to the press release here, that's why I was saying this revenue growth number of 13%, that's not what we're seeing here. This would be more realistic to what I'm thinking, is they're going to be in this 20 to 25% range for revenue growth, not so much the 13% range with where they were at. But let's see what happens in the next year. All right, guys, we are going to run through Stock Analyzer, but I need you to know that we are doing a web class tomorrow. We're going on what to look for in a 10K. A lot of people say, hey, we want to go deeper. We want to understand a 10K. It can be a very intimidating document. That's what we are going to go through tomorrow at 2 p.m. Thank you. 2 p.m. We're going to go through that. The link is in the description below. Click on that. Join us tomorrow, 2 p.m. You're going to love it. If this is your first time and you've never even heard of what a 10K is, it's an SEC document that tells you everything that you need to know about the company. All of those nitty-gritties are going to be in there, so please join us at 2 p.m. tomorrow. Click the link in below. All right, let's go to Stock Analyzer. And what I'm actually going to do is go to my history, and I'm going to click on Palantir here. And this is from May. And the reason I'm clicking on this from May is because I want to see. I want to not put any bias in there. Let's see what this is spitting out, because I'm looking at this saying, my number is 15% revenue growth. Analysts are thinking that it's going to be mid-20s. But from what I just saw year over year of 13%, I don't know why that number is sticking with me and worrying me so much, but I'm going to give them, you know what, I'm going to change this one to 10. Why don't we put in here 10? We'll do 18, and I'll leave 31 there. It's not going to be symmetrical, but let's do that. Profit margin, I'm going to leave the same. And here's the hard part about the profit margin, guys, and the free cash flow margin, frankly. Easier with free cash flow because they've been generating it. We don't know where the profit's going to be. That's the hard part. There is no profit right now. And remember, when I hit analyze here and I spit out numbers, this is assuming a profit today. So make sure you take that into effect when you're going and running this through your stock analyzer tool. PE, I'm actually going to increase the PE here. I'm going to go with 20, 23, and 26. This is a young, that didn't make any sense. This is a young company that has a lot of potential and a lot of room for growth. So if they can grow at 31% with 35% profit margins and 40% cash flow margins, I'll give them a PE of 26. And I'm going to adjust my return there. It's going to be a 16% return. So let's click this 12, 14, and 16 desired annual return. All right, so my numbers are basically $3.35 to $4.50. You can see it's on my watch list for $4.50. $10 to $12, and $32 to $37 on the high side. And if you bought at these prices today, these would be your returns down here. So if you bought at today's price, $17.23, if you paid that price today, you would lose 4.38% over the next decade. Now, if you bought today and everything in this category worked out here, you would make a pretty good return, 25.75%. But remember, that assumes profit today. That assumes everything is perfect today. And it's just not. So this is a company where we're going to keep following it. I think that they have something to offer for the future. There is absolutely no doubt. But the question is, do you want to buy that future today or do you want to wait? You guys have a great day. See you next time.